and welcome to Taking Stock. This is the show where we take stock of the entire week's trading action and tell you what triggers you should watch for as you head into next week. I'm Sonia and with me is Anuj. Hi Anuj, it's been a rather downbeat week for the market. We lost 2.5%. The Bank Nifty was down more than 5%. Do you think this could be the start of perhaps the uptrend getting arrested?
Hi Sonia, you know what, this was the week after Diwali, so let's give the market a bit of benefit of doubt. That's what a lot of people have been saying, that it's the post-Diwali lull. Normally you see that Muhurat day market hits a bit of an intraday peak and after that you struggle a bit. So let's just give that much benefit of doubt, because we've had a one-way run from 5200 all the way up to 6300, so 1100 point rally. But I think what was interesting this week was the technicals of the market, because this week every day the market ended at day's low. Every day the Bank Nifty underperformed, and the Bank Nifty was below the 200-day moving average. You saw a lot of banking names losing about 7 to 10%, in certain cases 12% for the week. You again had the expensive stocks like IT and pharma actually outperforming this week, so some of the money came back over there. And globally you had the dollar index going back to 81. You had problem in Indian currency this week. The Indian currency was down 2.5% this week. So all point to a bit of global risk aversion, and now you have to see whether this was just a bit of profit booking in an otherwise bull market, or this is the start of a downtrend. I think the month of November will give answers to that, because we don't have any triggers as well in November. We'll be only looking at the FI data and global cues. And
for now the FI data is solid, right? Like most experts were also pointing out, this market has rallied 20% since the lows of August. I think giving back 2 and 3% should not really worry too many on the street. But let's pose that question to our two guests on the show. We have a fundamental and a technical expert who join in. We have Sushil Kedia from CIMB for a technical perspective, while Vikas Khemani of Edelweiss Securities is here to talk about the fundamental view on the market and how we should approach next week, more importantly. Gentlemen, thanks so much for joining us on the show. Sushil, I want to start off with you. This week was a bit of a tough week. We had a couple of choppy days and the markets closed at the lowest point every day. How would you approach the next week? Do you think this choppiness or volatility could continue?
I'm not looking merely at choppiness. I think there is a firm sign of a clear top coming in. I have been talking topish for almost 5-6 weeks. The day the new RBI governor made his maiden speech, market had made a high of 61.74. Since then we dropped about 400 points and we rose 600 points from those lows, and we've come back to close roughly where the first speech from the RBI governor came. So in about 6-7 weeks, net Nifty has really not moved in that net change sense, but a lot of things on the internals have changed. I'm going to talk later in our discussion about how I am seeing global markets, almost all of them stacked one way towards just one single big worry. There's something cooking up somewhere. I think a major risk off season is going to return upon us, a winter of risk off. So looking at all of those and a number of other patterns and other studies I do, I think I have been a little early in calling the market top. Who knows, it has topped out right now. I think it has.
Okay, we'll continue that conversation in a bit. Before that, let's get Vikas Khemani of Edelweiss in on this discussion as well. Vikas, before I ask you about your market view, I want your view on Tata Motors. Post market hours on Friday, as in we did see, of course, that Tata Motors stock was surged a little bit in late trade, but the numbers that came in were really terrific. How would you think the stock would move on Monday?
I think it should be positive. I think stock has been on a sort of roll for some time, and I think numbers have been reasonably good. So I think there has been a lot of interest in the stock we have seen, and I do feel that if you ask me specifically from Monday's perspective, it should go up. But I don't know. I'm not expert. You can ask probably technical perspective more on that. But overall, we are positive on the stock. I think from a fundamental perspective, we do think that there is still some steam left, and stock has been doing pretty well, and I think the numbers have been supporting that, so that should continue.
Because you talk to a lot of institutional clients, what do you think is the sense right now in India? Because this week we've seen a bit of profit booking, we've seen banks underperform, we've seen some money go back to IT and pharma. Is a bit of risk off coming back to the market, and how would you be positioned on the market after the kind of run that we have had so far?
Yeah, Anuj, I think if you see, there was a sort of very sharp rally which we saw in the recent past, post RBI governor came in, and I think also it got coincided with QE tapering getting postponed. So I think to that extent we have seen a good rally coming in, and I think after such a sharp rally without being without being backed by a significant on the ground change in the economy, there is some amount of consolidation, some amount of correction is bound, and I think that is what we are seeing, and I do feel that markets will consolidate and correct around in medium term, because I think there's no major trigger as such left at this point in time. I think next major trigger is only the state election results, and I think that would be probably first or second week of December. So once till then, I guess market would be probably lacking any major trigger. So you would see probably somewhat sideways or corrective kind of market sentiment. Liquidity definitely is slowing down. I think post US data showing some amount of strength, and also fear of, as Sushil was saying, that probably QE taper sort of coming back, or some amount of risk of sentiment coming back on table. We have seen ETFs seeing some amount of outflows in the recent past, in last 3-4 days. So I think that is getting reflected in terms of the market movements as well. So I think you might see those kind of sentiments sort of coming back, but will you see a major reversal of the current ongoing thing? I sort of don't believe in that, unless I think we see some major global development which I am not aware at this point in time. So I think let's see how it pans out, but I would tend to think that market will definitely correct and consolidate in a narrow range in next couple of weeks.
Indeed, that's an interesting point that Vikas made about global markets. And Sushil, I want to talk about this with you. You've been calling for a steep correction in US markets. A, when do you see that playing out? And B, what kind of correlation will other asset classes like the dollar and in turn Indian equity markets have if that steep correction plays out?
See, the call for a correction has been getting constantly signaled from the charts. When you are anticipating and sort of you're preempting, you're calling for a trend reversal which is not yet in place, the risk of getting whipsawed a few times, the risk of having to hit stops will be in place. But from the several US indices, the one that has clearly made a reversal is the Nasdaq 100. And Nasdaq 100, given its nature, is high beta. A couple of interesting insights from there that I was just observing this afternoon. While the ratio chart of Nasdaq 100 to S&P 500 has constantly been rising since the lows of 2001 when Nasdaq 100 collapsed, I think this 12-year outperformance of Nasdaq 100 is almost about getting over. So it's not just that index is topped out, its outperformance too is. And when I also ran a ratio chart between, say, Nasdaq 100 and the CNX IT, the kind of 10% additional up move the CNX IT made since I stuck my neck out that this index is topping out, even though it happened in a fairly volatile fashion. Not just trying to hang on to a view that has so far been a loser in last 1 month, but the CNX IT has had underperformed the Nasdaq 100. So going forward, if my thesis comes right, that there is going to be a season of risk off, a winter of risk off, and pretty much everything in the world will go down except for the US dollar, then who knows, I am just imagining, who knows, an aversion to investment in IT stocks may come, combine that with, the equity beta, that is, the CNX IT has a far stronger beta with the Nifty index than with the INR USD. So, okay, that was one way to correlate the US market. Another way is the US markets, the equity markets are the last ones to move in short-term trading cycles. See, Korea has made a clear-cut top out last 3 weeks. Basic technical analysts will tell you that market is no longer bullish, it's definitely reversed. China was not bullish. Anything else in Asia was not. Japan, you don't count really in Asia, but even Japan is inside a fulcrum. It's going to break out either ways. I'm tipping my hat, it's not going to break out upwards. So while the US markets kept on eluding a sense of strength, and I'm sorry, there has been a distribution going on elsewhere. To wrap it up, looks like once these markets top out, I think the consensus or the complacency that exists that we will keep going up is going to be abandoned very rapidly.
Okay, Vikas, until this market finds, the next direction for itself, a lot of people are recommending a stock-specific approach, because even with the headline index at close to a record high, mid-caps are still 30% off from their record highs. If you had to recommend 3 or 4 stocks, either from the frontliners or from the mid-caps, what would your top picks be now?
I think I'll probably stay away from recommending getting into specific stocks, but I think mid caps at this point in time are offering tremendous value. That is for sure. I think there are lots of high quality mid caps. Which especially if you take out, let's say, consumer and pharmaceutical space, which is slightly overrated. There are in all spaces there are good high quality mid cap stocks which you could look at. I mean, trading at one time book 5 to 6% kind of dividend yield, and I think especially in the manufacturing led sectors, whether it is auto component or textiles or export oriented sectors, in these sectors there are very high quality stocks available, and we do feel that I think as the sort of in the recent past, as the investor risk appetite was coming back, you saw mid cap rally happening, and I think still there is a lot of hunting happening on those stocks, and investors are kind of looking for those names. So we do think that in each of these segments you will see a lot of valuation buying opportunities there. One can really look at, depending on what is the risk appetite of individual investors, one can sort of align those stocks and portfolios. But broadly speaking, I think going forward, according to me, as we are into corrective phase, banking and financial services sector would have again a lot of opportunities to be shopped around. Manufactured export would have a lot of opportunities shopped around. IT sector, according to me, mid-cap IT is again a very sector where you can find many good quality companies which will grow 15 to 20% or in the next couple of years, as the US market growth is very promising, and you could look at many ideas out there. So I would say probably in these 3-4 broad range of sectors you can find many ideas.
Okay, so banking, there's mid-cap IT as well. Tech Mahindra actually was one of the big gainers last week because of the good move that it saw in its numbers as well as its MSCI inclusion as well. So Tech Mahindra there, as you can see, up about 6%. But let's take a break on that note. When we come back, lots more stock chat with our guests. In the meantime, the Narendra Modi wave is not only creating ripples here in India but amongst global investors as well. And with Goldman Sachs modifying, or in other words, modifying its view to India, on India to equal weight from underweight, we spoke with Timothy Moore, the Asia strategist at Goldman Sachs, who said that the market is viewing Narendra Modi as an agent of change. Take a look.
We are observing, and this is empirically sort of the case in terms of how the market's trading and also the very large number of investors we speak to, both externally as well as domestically, is that Mr. Modi is viewed as an agent of change, and the market has been trading or reflecting various opinion polls and has been responding to those. Our view has been the market's trading politics, and we need to understand that and reflect that in terms of our overall assessment. It looks as though there's some empirical evidence that the external pressures have moderated. So the trade account has been improving. It looks like the current account will begin to moderate. Of concern with regard to the magnitude of the current account deficit and the funding of it through the capital account clearly would have moderated. And so our expectation is that as and when the Fed does begin to taper, let's say, again, for argument's sake, next March, that the Indian equity market's response to that and the currency's response would be much less severe than it was as we saw in August. Foreign investment community has been remarkably sticky and stable in terms of the amount of money that has been put into India, even during periods of quite significant stress and challenge. If under a situation of extreme duress, i.e. the middle of this year, we saw actually quite modest and attenuated outflows, I'm not sure where a more widely anticipated and signaled and hopefully better managed transition next year would necessarily result in a huge outflow.
Welcome back. You're tuned into Taking Stock, and we are talking to Sushil Kedia from CIMB and Vikas Khemani from Edelweiss Securities. Sushil, this week was all about banking names. Most of the bank names were down about 7 to 12% this week. What's the call now? More from here, or have they become buying opportunities?
No, I'm not going to be searching for buying opportunities per se, broadly speaking, within banks. I think this was a rally that has got done. Even though, for those who are compelled to hold banks within their portfolios because they can't hold more than a certain small amount of cash, I think a relative outperformance should begin on the PSU banks. They have, as all of us know, much cheaper valuations. And I think, from a technical perspective, the expected fall in PSU banks is going to be less than the private sector banks. And so perhaps, in portfolio defense, maybe some switches can be made into that.
Vikas, we were all fearing really bad numbers from banks this quarter, especially PSU banks. But except for one or two, that wasn't the case. In fact, a lot of people are now calling for a bottom in PSU bank earnings. How would you approach the sector overall, and within that, the whole dichotomy between private and PSU banks?
So I think banking sector numbers in private sector banks number was pretty good, and in PSU banks I think the reason why they didn't appear so bad because they were expectations were very low. So I think markets were kind of very tentative about what or expecting the worst to happen in most of the PSU banks. So hence, as and when the report came pretty much in line with expectations, market didn't react much. And to some extent, I think, there's a belief which got generated that I think worst is behind on the economic side. And from here on, you will not see numbers deteriorating. Hence, you saw short covering happening in the PSU banks and a sudden rally happening. But having said that, I think, while it appears that, worst is behind, but I think improvement is yet to happen. I mean, we have heard even, recently Chanda Kochar, CEO of ICICI Bank, saying that NPAs are yet to will further go up in the system. Restructured asset might go up in the system. So I think still it's not that suddenly things have sort of improved in a big way to call for a big rally in the sector. Having said that, I do believe that things are better than what they were before. And I think stocks are trading at a good valuations. So I think if the market corrects, in the recent or if in the ongoing risk off trade, and you see banking sector correcting, I think one should look to sort of add to the portfolio, because I think as and when the recovery happens, banking would be the one sector which would lead the rally like it led this time. So same way, I think correction also could be led in this fall by the banking and the capital goods and the sensitive sectors. I think it will. So the only point I would like to make here is that as and when the recovery happens, this sector will give good return, and as and when the stocks get to the interesting valuation, cheaper valuation, one should look at that. So I think one has to really see from the investing perspective. Traders could sort of get out, but if you are a medium term to long term shareholders, I think on the correction you would look to sort of buy banking stocks and from a 12 to 18 month perspective.
Vikas, next week we have some important earnings. There's the entire metal sector that will report their numbers with Tata Steel, etc. And Tata Steel has in fact been one of the top outperformers of late. What is your expectation from this quarter's performance?
We've been positive on the sector and the stock per se. I think we've been seeing some amount of improvement on the chorus front, and obviously even local front. I think most of the metals companies have been reporting positive numbers. So I think we think that numbers would be pretty good, and I think especially if you hear yesterday's ArcelorMittal commentary, I think they are also guiding positive outlook in the European side. So if I were to look at both developed market, European side as well as the local side, things should be looking good, and I think stock is trading pretty cheap, and Tata Steel in general and in particular, and I think metal stock in general. So you will see definitely interest in the metal sector remaining quite positive.
Okay, we don't have too much time, so let's get some final stock calls in. Sushil, since you are bearish on the markets, if you had to give us some short calls or some nifty stocks that you are cautious on right now, what would your pecking order be?
See, except for some of the results still around, those are not the perfect time to go short on right now. But I think if you're taking a strategic view and you're not playing for 2, 3, 5%, then I think you can almost go short on anything. I'm looking at a very deep slide, and it's going to be very rapid. So I think trying to get stuck up at 2, 3, 4% and small stops is not going to work.
Sushil, I'm going to take a viewer query which I just got as a tweet. Someone's been following you on JP Associates and wants to know what to do with that stock next, because you got that one right. So what would be your strategy on that one?
Yeah, see, that has also risen quite a lot from the levels we first spoke about, that I won't short that stock. So it's risen a lot already. There are signs of topping out, given such smaller stocks are much more noisier. I don't want to really cut it too fine. If you're holding it long, keep a trailing stop, which could be about 7-8% lower from here. It's much more noisier. You have to have a wider stop. I'm not going to buy that stock for sure. I'm not going to buy anything right now.
Okay, point taken. Sushil Kedia, Vikas Khemani, thanks so much for joining us and putting all of that into perspective for us. So there is some caution on the street at this point in time, and perhaps it's better to just wait and watch.
Indeed, and let's also wish our guests a very happy weekend. It's one which I think a lot of market participants would want to enjoy.
Okay, it's a truncated week next week as well, so can't lose hope. On that note, we'll take your leave. Thanks so much for watching Taking Stock.